Hey guys, it's Will, and people always ask me, where do you find the best companies to invest in, especially in AI or quantum or space or defense, nuclear? Well, the truth is, it's not just me. It's a lot of the community members in StockMate that surface some of the biggest opportunities, and sometimes it comes from me having conversations with AI, and other times it's just being on the ground, like when we flew out to the space symposium here in Colorado Springs. We got the media pass to dig into some companies like Rocket Lab or Lockheed Martin. And today's spotlight is AMTM. So, surrounding yourself with sharp investors, it's one of the number one ways to apply some of the insights that we find in our investing strategy. And just a friendly reminder, it's the second link in the description for our daily live trading. And speaking of defense companies here like AMTM, we're taking a look at a defense company, BigBear.ai, and we're running a special sale over there. If you enroll in StockMate today and BigBear.ai hits $5.50 by May 20th, you'll get StockMate for free. Let's talk about why you might want to be considering taking advantage of AMTM as a stock that you consider in your space tech portfolio. What we're really watching here with AMTM was that they recently got IPO'd. It was brought to my attention a little while ago from one of our members, as I mentioned, and when it IPO'd, it shot up at one point to what seems to be about $33 a share. Then it sold down to $16 a share just a little bit over a month ago, and then started to trend back up, broke up above this 200-day moving average. And yeah, it's a little volatile, but it's an interesting one because when we look at the recent moves that it's had, there's a three-part analysis that we go through when analyzing a good deal. The first is the market. So if you guys are familiar or not familiar, that's okay. AMTM, this company, is one of the companies that, again, was at this symposium. You can see what they do, and that they have some Department of Defense contracts. They work with NASA. They have their presence in extending well beyond this exhibit hall at that event because they are a leader in defense, space, intelligence, and civilian markets actively networked. And you can see they say advancing the future together. One of their recent contracts, $91.8 million for cutting edge software engineering for naval sensor systems. They also, if I'm not mistaken, they do a $360 million deal here to divest its rapid solutions product business. Then they also have some of the outlines for their different systems, mission modernization, space, digital transformation. So focusing a lot on software, data analytics. They use AI. It says we believe in fostering employee engagement, welcoming all perspectives. And you can see that they're hiring pretty aggressively as well. And they're just newly a public company. Now, of course, there's more volatility when companies just go public. It's quite often you're going to see volatility. And we saw that with their stock. But I think their recent pullback here in their market, they're in a great market. And we're going to talk about it, but they're making really good revenue numbers and really good financials. And that's one thing. But after the IPO, they've sold off quite a bit. Now they're starting to recover. And I think there might have been an oversell with AMTM. And we'll kind of jump in here. So market's growing. Then we get into, our real world usage. Is there real world usage? Yes, there seems to be. The markets they're in here they got Army contracts, Air Force. You can see Navy and Marine Corps. You got Homeland Security. They're working with Australia and United Kingdom as well as the US. And you can take a look at some of those contracts and what they kind of outline and how they're connected with each one of these military branches. And you can see they have all of their services listed and what it is that they're doing. But again, you can look at all these markets and just realize that the market they're in is growing very fast. There's a lot of potential here. And so we get into our analysis stage, which is 3A, B, and C. We got the chart, we have the financials, and then we have the news. If you take a look at some of the financials for AMTM, the stock here has a $5 billion market cap. So not a small company, like $5 billion market cap. That's pretty good size. But this is where it gets interesting, right? Their revenue quarter over quarter is in the billions of dollars. So as you can see, they had 2 billion here, 2.2, 3.4 billion in that quarter, and then another 3.5 billion in that quarter. And all we're seeing is their net income increase and their year over year increase, and their profit margins go up. So from a perspective, especially with these recent earnings, of seeing green happen in the business and starting to see them bring serious revenue, they are one of the top companies. And they got thousands of employees, right? So that they're already there. But now that they're starting to transition to focusing maybe a little bit more for shareholders, as they recently went public, maybe we start to see even more of a focus on, cutting down maybe more expenses and increasing their net income, which in that case would put them in a really nice spot. So again, billions of dollars in revenue per quarter, pretty good place to be at from a financial perspective when we're looking at AMTM. Now the second piece is their stock. And as you guys can see, AMTM, you might say those are good financials, but how do we even read anything from the charts? You might say, if the second piece is the chart, we're looking at it, is there anything we can really identify? And to be honest with you, the only thing that we can identify is that it's starting to push up above the 200-day moving average. It just pulled down again here, and it's maybe starting to see some bullish trend begin. Obviously, we want to catch trends early, but it is kind of hard to tell. All I could say is there is this uptrend of rising supports, support, and now today with a little bit of a pullback, we're kind of looking at it and saying, I wonder if this could sustain. And then you have this resistance here. So you got resistance, and resistance. And so maybe, this is actually kind of this new trend that's starting where it's boom, 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 and it's back down to here. Now we're saying, if we start to see it validate this, bounce on this 200-day moving average, start to push up into this $21.50 range, then maybe that is the trend that we're starting to see develop. And I also noticed that right at IPO, they started to trend like that before selling down. And so now we're saying, if that's the case, let's say they continue and they do bounce at this 200-day moving average, so critical point right here, then the margins would be kind of a trend like this, okay? And if that happens, maybe it would be, 10 to 15% margin for us to see something like that. And maybe it takes a lot longer. Maybe the trend makes its way to something a little bit less steep, which would be kind of healthy. But again, we're watching it closely because they recently went public, and it seems that they sold off pretty well right at IPO. I almost said market open. That's funny. So we're gonna watch that closely. So AMTM with the chart and the financials. The financials look pretty good. The chart is looking a little bit volatile, but maybe we start to see it indicate a pattern that we can consistently really look at with some confidence. Now, when it comes to dynamic stocks or really finding the edge in the company, we can take a look at the news and just see, again, all the markets they're in. Then we are looking at their capabilities. They're focusing on land vehicles, equipment, naval deterrent sustainment. So they operate in the water, they operate through the air, they have even nuclear security there. So they're working in logistics and supply chain. They're really in a very well-established place. Now, if we saw all these markets and we were looking at, they only have 100 employees, I'd be worried. But they have like 50,000 employees. So I wouldn't be too worried about the diversification of their markets. I think they're actually they're well equipped. So on top of that, they have these contracts and they've been rolling in. So, just keep that in mind. They've been rolling in. They got, there's a $247 million global counter threat finance contract there. Then there's the Space Symposium. We got to go there. Then there's a nuclear reactor program. That's probably some of the security. Then they secured a 79 or $71.9 million contract for electromagnetic environmental effects tests, evaluations, and integration solutions. They're very cutting edge, and where the different cutting edge technology is being deployed, whether it's in the military or in the US or maybe in other companies, we are there, and we are, if we're looking at this company, they're there and they are being the main player to make sure those projects happen. They were also awarded this $447 million Air Force pre-positioned asset management services program. I mean, these are very large contracts. And so, as we start to watch them continue to build out their contracts and continue to take on some of these big contracts and execute efficiently, there's another $490 million contract there. We can draw some more conclusions. There's a $256 million NASA contract that they're being a go-to contractor to getting stuff done and improving the technology in the US. And so to see them as now a public company, I think is quite a good, it's a really good place to be, because they haven't been public before up until this point. So with the news looking as good as it is, they're billions of dollars in revenue per quarter. We're talking multi-billion-dollar quarters with just a market cap there of about $5 billion. Then we can start to tie that all together and say the financials, they look pretty good. They're obviously spending a lot of money. If they're just becoming, basically profitable recently, where they are coming out with these positive earnings, they're up 100% year over year. And maybe that's why they went public. They said, we're going to start cutting some of our expenses and still deliver these contracts, but at higher margins. And it might be a good time to go public. I don't know what the thought process was, but hey, if they do that and they're bringing in this type of number on revenue, we could see really big growth here with the stock potentially. So this is what I'm going to do next, right? We have step number 3, which is the margins for profit and the plan. And what I could say here is that this support here, notoriously in IPOs, they could be volatile. Sometimes they sell off big and they continue selling off. Sometimes they have amazing recoveries and they shoot up and skyrocket. You could see right at IPO, they shot up to $33 and then they sold down to 16 and now they're back up to 20. So it's volatile and we have to, urge some caution. But I just wanted to disclose, I do have a position in AMTM that I recently entered. I do see it as not a huge position, but something that I'm going to watch closely and potentially add to my position if I get more confirmation of a bounce here at $20. If this is the trend and we are actually identifying it early, it would be a very nice thing to see it push up into this $21.50 or $22 range before continuing up. Or if we're not in the right headspace and that's not the trend that's starting to develop, then hey, it sells back down and maybe we then have to reevaluate and see where things are going. But with the charts, it looks okay, kind of uncertain, but the news looks pretty good and the financials look pretty good as well. So those are things we're looking at. The market's growing too, and I would imagine that could impact some of their future growth. So that's why we're covering it here on the channel. So when it comes down to the biggest moves in the market, a lot of them happen in the first 20 minutes of the day, sometimes the first hour. And we do trade live every morning. If you guys ever want to be there, it's the second link in the description. And also, we've been just growing so fast. We're up to 20,000 subscribers. Just want to say, well, I say 20,000. We're on the road to 100,000. We're approaching 19 here. And I just want to say thank you guys so much. Really do appreciate you all. And maybe it's not the prettiest. We do analysis in the airport. We do analysis here. We've been kind of on a move now where we've been able to expand into some other markets and coverage because we've been a little bit less, not traveling as much recently. We normally travel quite a bit. And so we haven't been traveling as much recently. So I've been able to do some more coverage. And if you guys have specific companies, always comment down below, let me know. But some of the insights we share when we get to do this analysis or go meet these companies in person like we did in Colorado Springs, or when we went to the Qubits conference, we got to meet the quantum computing companies and the CEO there of QBTS, D-Wave. You know, there's certain insights we get, there's certain things we learn, and I like to think that they're really impactful in helping us with getting investors the best chance to succeed. And with the recent market movements that we've seen, it has been volatile, but we're starting to see some widespread recoveries in the markets as of recently, things turning green. And of course, you know, even this morning, we're looking at the market turning green. We're having some, I would encourage you, have some caution, but also, you know, these are some of the biggest opportunities that happen, and they don't happen very often. And so whatever it is, if you're buying here, you're buying at the bottom, or you're buying at the top, or whatever, just I would encourage you guys to have a plan. This company, we'd like to see the billions of dollars in revenue, and we do like to see that they are getting good contracts and the hundreds of millions of dollars. But ultimately, you know, what could happen is they can go up or down. And the best thing to do to make sure that you're long-term growing your portfolio through some of maybe the swing trades or the medium term on top of the intrinsically valuable long-term investments is a good thing to do, is just to have a plan with the types of profit margins that make sense and the type of risk that you can manage and cut losses at a short level and look for larger pieces of profit. Then you're not wondering if you buy the top or you bought the bottom. You simply have a plan, whether it's to add to the dips or to play the swings and manage your risk accordingly. And that's normally what leads to portfolio growth, not so much timing. Does that make sense? So, does that make sense for everybody? Hopefully you enjoyed. Does it help that we cover these defense stocks even though they just IPO'd and they don't have a pattern? Let me know. Does that seem like something that's going to put you in a better place to grow your portfolio? I hope so. And again, guys, does it seem like something that would help if you get the chance to swing trade BigBear.ai and join us in our live sessions at Market Open tomorrow? I feel like it would, and I would love to have you there in the second link down below if you want to join us there at Market Open Monday through Friday. All right, guys, thanks so much for watching. I'll see you guys in the next video. Take care.